Everyone is waiting for the SpaceX IPO, and when it finally comes, billions of dollars are going to flood into space stocks. But here's what the crowd is missing. The single company that benefits most from SpaceX going public isn't SpaceX. It's the company that the US government, the Pentagon, and the Space Development Agency are quietly paying billions to keep alive, because they cannot afford to let SpaceX have a monopoly on space. This is Rocket Lab, ticker RKLB. Most people think it's just a smaller, cheaper version of SpaceX. That framing is wrong, and it's why most investors are either overexposed or completely missing the position. Rocket Lab is an end-to-end space company. It doesn't just launch rockets. It manufactures satellites, operates them in orbit, and supplies the components that power other companies' spacecraft. The launch business is the brand. The satellite systems business is the actual money machine. And then there's Neutron, the rocket that could make or break the entire thesis. Let's break down exactly what you're buying, what the real risks are, and why the timing matters right now. Rocket Lab has two businesses inside one ticker. First, launch services. The Electron rocket. Small payloads up to 300 kilograms. They've completed over 68 launches with a 94% success rate. In an industry where rockets blow up routinely, that track record is genuinely extraordinary. But here's the number that surprises most people. Launch services is not where Rocket Lab makes most of its money. The space systems segment, satellite manufacturing, spacecraft components, orbital operations, accounts for roughly 70% of revenue. This is the quiet cash cow. While retail investors fixate on rocket launches and countdown streams, the business is actually running a high-margin B2B manufacturing operation for the global space industry. Revenue grew 78% in 2024. Backlog crossed $1 billion. They just won an $800 million contract from the US Space Development Agency. This is no longer a speculative startup. This is a company in what analysts would call Stage 2, explosive expansion, past proof of concept, not yet at full system completion. Here's the structural argument that doesn't get enough airtime. The United States federal government, the Pentagon, Space Force, NASA, the SDA, has a deliberate policy of not concentrating critical national infrastructure in a single private company. They saw what happened with supply chain concentration. They're not about to repeat it in orbit. Rocket Lab is the designated alternative, not because Peter Beck lobbied for it, because they earned it. Reliable launches, on-demand scheduling, domestic manufacturing, and no conflict of interest with commercial competitors. The $800 million SDA contract isn't charity. It's the government saying, we need you to exist, we need you to scale, and we are going to pay for that. When you buy RKLB, you're partially buying a government-backed infrastructure play dressed in a growth stock wrapper. Every other factor in the Rocket Lab thesis feeds into one moment. The first, Neutron launch. Neutron is a medium-lift reusable rocket. Think SpaceX Falcon 9, but designed specifically for mega-constellation deployment, the commercial backbone of global satellite internet, imaging, and communications. Planned first launch, mid-2026. If Neutron launches successfully and proves reusability, Rocket Lab moves from Stage 2 to Stage 3. System complete. The valuation step change from that event is not linear. The current stock price at roughly $37 billion market cap is trading Neutron as a possibility. A successful first launch reprices it as a reality. Compare that to SpaceX's private valuation of nearly $1 trillion. If Rocket Lab captures even a fraction of the medium-lift market, the multiple expansion alone justifies the current price. This is the thesis in its simplest form. You are buying a call option on Neutron, dressed up as a profitable space manufacturing company. Elon Musk is a polarizing figure. Half the world loves him, half wants nothing to do with him or any company he touches. Peter Beck is the opposite. He's a quiet New Zealand engineer who built a rocket company from scratch, bootstrapped in a garage, and grew it into the only commercially reliable alternative to SpaceX. He doesn't tweet stock prices. He doesn't fight culture wars. He builds rockets. That underdog, engineer-first identity is becoming a brand asset. A growing subset of institutional and retail investors, including ESG-oriented funds, are actively looking for the space play that isn't Elon. Rocket Lab is it. This isn't just soft sentiment. Brand differentiation translates into customer pipeline, talent recruitment, and media coverage. The not SpaceX but credible positioning has real commercial value. Now the part most RKLB bulls skip. 3 risks are real and worth pricing in seriously. First, Neutron delay. The first launch was originally planned for 2024. It slipped to 2025. Now it's mid-2026. Every delay burns cash and erodes the narrative. If Neutron slips into 2027, the profitability timeline breaks. The 2027 EBITDA positive scenario becomes 2028 or later, and the valuation multiple becomes very hard to defend. Second, and this is the one that deserves the most attention, valuation. Rocket Lab currently trades at roughly 49 times forward price to sales. Let that number land for a second. 49x PSR. For context, that's in the range where Tesla was trading during its most aggressive growth phase in 2020 and 2021, right before a 70% drawdown. Tesla ultimately recovered and went higher, but investors who bought at peak PSR waited years to break even, and many panicked and sold at the bottom. The analogy isn't that Rocket Lab will crash 70%. The analogy is this. A 49x PSR multiple means the market has already priced in years of flawless execution. There is almost no room for error. One bad earnings call, one Neutron delay announcement, one macro risk-off event, and the stock can reprice 30 to 40% in days, not weeks. This is not a stock where you put in money you cannot afford to lose. This is a high-risk, high-return instrument. Treat it like one. Third, SpaceX itself. When SpaceX IPOs, it will vacuum up capital from the entire space sector, including Rocket Lab. Institutional rebalancing will happen. There may be a sell the news event across the sector. These risks don't invalidate the thesis, but they do mean this is a position that demands conviction and a stomach for volatility, not a comfortable hold. So where does that leave us? Rocket Lab is not a buy-and-forget stock. It's a calculated bet on a specific sequence of events. Neutron launches successfully. The government keeps backing the alternative to SpaceX, and the space systems business continues to compound. If that sequence plays out, the current price looks cheap in hindsight. If Neutron delays significantly or the macro turns, the downside is real. The verdict is not buy everything now. The verdict is, this is the only credible second player in the space race, the US. Government wants it to survive, and the Neutron catalyst is 12 to 18 months away. Size your position for the volatility. The space economy isn't speculative anymore. It's infrastructure. And right now, Rocket Lab is selling tickets at the construction phase price.